1.5 Forms of Business Organization. While elaborating business as an economic activity, we have seen that forms of businesses may be discussed on a variety of criteria. For example, on the basis of nature of activity undertaken, a business may be engaged in industry, trade, or other services. And on the basis of size and scale of the activity undertaken, business may be classified as micro, small, medium, and large. Generally, however, whenever we refer to forms of business organization, the attention is drawn to the types of private business ownership. Before we take up a brief discussion of various forms of business ownership, it is important to take note of following points about business ownership. First, business ownership is a bundle of rights. Ownership is a bundle of rights. These rights occur because a person has invested money in it. First such rights is the titular exclusiveness. If you own a book, no one else can claim its ownership. Others may own the respective copies. You may use it, that is, derive benefit from. You may also lend it or sell it or donate it on your own will. Likewise, business ownership occurs by investment of capital. Profits that belongs to the owner. However, if there are losses, these have also to be incurred by the owners. Business owners also have a right to run the business that is managed and operate it on day-to-day basis. However, in certain forms of business ownership can be separated from that of management. An important right associated with business ownership is the right to dispose of and transfer ownership of business. It also includes transfer of ownership by succession after owner's death. Such a succession occurs smoothly when the persons act prudently and divides the ownership with the business among the successors by a registered will. Second, business may be owned singly or jointly. A business may be owned singly, that is, a sole proprietorship concern. Else, it is to be organized as a partnership or even a larger collective, such as cooperative. When owned singly, if all the profits belong to single owners, so do the losses. Shared ownership by pooling of capital will facilitate undertaking large projects. However, there is a prudential reason for shared ownership too, and that is sharing of risk. Joint family businesses, a concept equivalent to Hindu undivided families in India, views businesses as a family property and vests its ownership among the members of the family. Here, the sharing of ownership is guided not as much by possibility of raising large sum of capital or diffusion of business risk as it is guided by consideration of equitability distribution of ownership rights among the family members. In fact, business or organizational theorists and thinkers keep contemplating on forms of ownership, whereby the impact of business advertises on owners, whether single or joint, can be minimized. One such innovation is the idea of limited liability. Such business persons own the businesses with all its assets and liabilities. All its all its favorable profits or unfavorable losses occur to them. And in the event of business liabilities are more than business assets, their personal wealth would be utilized for maintaining the business liabilities. There is no such distinction between business person and business. The idea of limited liability caps the liability of business person just to the extent of the investment in business. This idea was initially implemented in company form of business and later in partnership form as well. Limited liability partnership LLP. Third, business may be organized as proprietary or a corporate concern. In proprietary concerns, business owners actively participate in the day to day working of the enterprise, known as owners managers. Business persons or entrepreneurs are thus not passive providers of investment capital alone. Business thus automatically become subservient to the self-interest of its owners. Obviously, such a situation would be more feasible when there are 4 to 5 co-owners and the nature and size of business is such that it can draw on the competencies and capabilities. Let us think of businesses where number of persons holding a share in the capital of the enterprise is large, in hundreds, thousands, and hundreds of thousands, who are also geographically dispersed. In such cases, a separate ownership of from management would be inevitable. The managers act as the agent of and in the interest of shareholders, the principals. Further, organization of business as a corporate entity endows it with certain other peculiar characteristics too that we will take up as we describe company forms of business. We have already seen that such a firm is characterized by limited liability of the owners, shareholders. A serious limitation of proprietary business is that the life of business is in tune with the health and life of the owners. Corporate form does away with these limitations as a company exists as a separate person distinct from its owners in the contemplation of law. As a separate legal person, it can thus have a life of its own independent of the lives of its owners. Having familiarized ourselves as to the facts that A. Business owners is a bundle of rights, B. A business may be owned singly or jointly, C. And that a business may be organized as proprietor or a corporate concern. Let us examine the various forms of private business more closely. 1.5.1 Sole proprietorship. When an individual makes a choice to start a business of one's own, to be one's own boss, sole proprietorship emerges. As such, it can be regarded as the earliest and the earliest form of business as a human occupation. One may open a daily needs store in a room or a corner of one's house. One may just set up a shop on the pavement in weekly bazaars, or may open a machine shop in the backyard or in a thinly habituated lane of a not so distinct locality. This form of business organization is much appreciated in entrepreneurship literature. The sole proprietor is regarded as economic hero, an autonomous individual who organizes production, uses creativity and ingenuity in innovation, bears risk and uncertainty. Draw analog from music. The sole entrepreneur is not merely the composer and director of enterprise orchestra, but also as a one person band. Of course, when the business grows as an autonomous behavior becomes a limiting factor, as the entrepreneur or sole proprietor is required to share decision making and let go control over the business. The business is undertaken could be on such a small scale that it may be hardly distinguishable from self employment. It may not even register as a micro or a small scale business enterprise or industry. It is an interesting fact that a very high proportion of micro and small businesses in India are unregistered. Usually, these enterprises, more so local retailers and street vendors, are so well integrated with communities that these people enjoy people's trust and provide personalized services. Together, these comprise the unorganized or informal sector of the economy. It is significant to note that even though individually these might appear of not so much impact, yet collectively such enterprise makes a tremendous contribution to the national economy. You have seen that numerically these enterprises are the largest. Their collective contribution to GDP, employment, and even exporters is very impactful. These impact even more considerable when we take into account indirect contributions such as suppliers to larger and even multinational enterprise. The importance is summed up in the cliche small is beautiful. On the flip side, products from such enterprises are often derogatorily called local to distinguish from branded. In common perception, working conditions in these enterprises are poor. These enterprises believe to form hire and fire policy, lack employment welfare measures, and lack s- systems to effectively deal with social and environmental concerns. Fate of the enterprise is linked with the personal well-being of the owner. This adversely affects consistency of services of such an enterprise as suppliers to large and multinational enterprises. It also affects adversely to those desirous of long-term contracts with these enterprises. For this reason, large and multinational enterprises prefer to transact business with corporate entities. The foregoing paragraph briefly evaluate the role of small sole proprietary firms in the economy from the BCK perspective, and this is going to be our focus henceforth. It would be more useful to examine this and other forms of business organization from the viewpoint of those created. In soul is equal to single individual proprietorship. The individual essentially relies on personal saving and assets. Example: room of the house, home furniture, personal bicycle or vehicle. To compress the individual capital of business. Note: investment of cash or in kind by the owner is called capital. However, in modern economy, where the financial system is fairly developed, it is often impossible to obtain microfinance loans in small denominations, say in thousands or two, and bank finance. Even better development, a financial system where the importance of entrepreneurship and business is considered, there may be business facilitators who may assist the individual in obtaining finance and other help. We shall be reading about them later. Good news is that in India there are a lot of emphasis on the business startups and entrepreneurship. As a result, sole proprietary firms are able to quickly attain a commercial scale distinguishable from mere self-employment. All the profits of enterprise accrue to the sole proprietor and so do the risk of business. Features #1 sole proprietorship. There are two columns. First is features and second is with whether merit or limitation and how. First, autonomy of being one's own boss. Merit. Because of freedom from restrictions of paid employment and amply scope of experimentation and express of one's creativity and innovationness. Second, sole proprietor of capital. Limitation. This limits the size of business. Yes, banks and lenders may provide additional resources. However, borrowing capacity to is determined by capital adequacy. This feature also limits the capacity to growth. Third, visibility of the owner and personalized service. Merit. For example, the personal rapport with customers engenders trust and loyalty. Fourth, sole bearer of risk. Limitation. This arises from being the sole provider of capital. If all the if all the profits belong to her, so do the losses. Fifth, unlimited liability. Limitation. It is a common limitation of proprietary forms of business organizations. In the event of insolvency, that is, liability is greater than assets, the owner's personal assets are evoked to make up the deficiency. 6. Faith as a going concern. Going concern is equal to enduring life of businesses in foreseeable future. Limitation. Sole proprietary entities going concern status depend on owner's personal health and lifespan, and after his death upon the willingness and ability of the heirs or successors in the family. Seventh, succession of ownership. By will, aka testament, or application of the law in inheritance. A will or testament is a legal document by which a person, the testator, expresses the wishes as to how the property is to be distributed at the death and names one or more persons, the executor, to manage the estate until its final distribution. If the will is non-existence, that is, for intestate succession, the applicable law of inheritance will come into force. For example, for the Hindus, Parsis, Buddhists, Jain, and Sikhs, the Hindu succession law 1956 is applicable. 1.5.2 Hindu Undivided Family Business HUF. HUF is an entity formally formed automatically by the members of common ancestry, including their wives and daughters. A HUF cannot be formed by a group of people who does not constitute a family. As such, a joint Hindu family in India is in fact by default a HUF. A HUF enjoys a separate entity status under the Income Tax Act. The Income Tax Act consists HUF as a separate entity if the joint family wishes to register itself as such for reporting income under the following heads: profit from business or profession, income from house property, capital gains, income from other sources. Since under Income Tax Act, HUF is a concern here with business owned by HUF, or simply stating joint Hindu family JHF or Hindu undivided family HUF business. Before we describe its features, it would be appropriate to clarify a few points on its meaning. The meaning becomes clear with reference to prevalence of joint family system in India. Family is formed by marriage. that is called as first generation. Marriage in most societies is a means of creating children. Thus, there is a second generation comprising the siblings. These siblings grow up, get married, and have children. Now, a third generation, a consortium of cousins. In parental lineage, there is a grandfather, father, and grandchildren. These three successive generations of a undivided family is known as HUF. Secondly, though the word Hindu is conspicuous, the definition of Hindu includes Buddhist, Jain, Parsi, and Sikh families as well. Thirdly, for the purpose of understanding HUF as a business entity, another important relevant law is Hindu Succession Act 1956. Features #2 HUF business. Two columns. First, features. Second, whether merit or limitation and how. First, formed by birth in Hindu, Buddhist, Jain, Parsi, and Sikh family. Merit. Family members may naturally join each other in business. In contrast, in a Muslim family, if the siblings wish to associate in a business, they will have to do it by a contract. Example, partnership agreement. Second, family pool of resources. Merit. It is possible to start or expand a large business. Moreover, common pool of capital may be utilized to diversify business in sync with the aspirations of the members of successive generations of the family. Third, social capital through family involvement. Merit. This is an instant trust among the family members as compared with the situation of profit with strangers. Family members toil hard to build the family business. Moreover, these may specialize in different business functions for greater complementarity of the mutual skills. Fourth, the family members are automatic co-owners, called co-partners, by birth. Limitation. Ownership in family business is an scripted rather than earned status. It can actually be quite frustrating for the outsiders, example, hired managers who help build the business. Fifth, decision making is quick. Merit. In the absence of other active major members of the family, the head of family, known as Karta, takes all the decisions. Subsequently, decisions are taken by in the family. Prevalence of mutual trust, informality of communication makes decision helps in decision making quickly. Sixth, unlimited liability of the Karta. Limitation. It is a common limitation of proprietary forms of business organizations. In the event of insolvency, that is, liabilities are greater than assets, the owners, here, the karta, personal assets are evoked to make up the deficiency. However, the liability of the other family members is limited to the extent of their share in the co-partnery. Seventh, faith as going concern. Going concern is equal to enduring life of businesses in foreseeable future. Limitation. Few family businesses last beyond third generation. Often family feuds result in business splits. In India, the split of business houses of Birla, Modi, Goenkas, and more recently the split of second generation of Ambanis are instances of this effect. Eighth, succession of ownership by will, aka testament, or application of law on inheritance. A will, a testament, is the legal document by which a person, the testator, expresses their wishes as to how the property is to be distributed at death and names one or more persons, the executor, to manage the estate until its final distribution. If the will is non existent, the applicable law of inheritance will come into force. For example, for Hindus, Parsis, Buddhists, Jains, and Sikhs, the Hindu Succession Act 1956 is applicable. 1.5.3 Partnership. Partnership implies contractual ownership of business. It is a relationship between two or more persons who agree to share the profits of a business. The business may be carried on by all or some of the partners, called active partners, for and on benefit of all. The contract, an agreement enforceable at law, called deed, is the essence of partnership. It may be verbal or written. It specifies the basis of association of the persons in a partnership business. Example, capital contribution, profit sharing, etc. See features hashtag 3. The deed may be registered in India under Indian Partnership Act 1932. Features hashtag 3. Partnership. Two columns. Features. First column, second column. Whether merit or limitation and how. First, agreement. Merit. The agreement makes possible co-ownership of business by persons who do not share common ancestry of a family. Second, two or more persons. Merit. Partnership allows raising of funds beyond the resources of an individual or sole proprietor. In fact, even a company being an artificial person can be admitted as a partner. Limitation. There's a cap of maximum number of persons. It is 10 for a banking firm and 20 for other firms. The reason of cap on maximum number of persons in the partnership, or for that matter any other non-corporate association, is the difficulty in tracing the owners or the heirs during such circumstances as insolvency of the firm. Let's remember, partnership enjoins unlimited liability on the partners. Third, profit sharing. Merit for the risk is sharing too. However, West profit sharing is an essential feature of partnership. Loss sharing is not. Certain partners may be admitted only in profits of the firm, example minor profit partners. Fourth, business object quite wide. Merit. A partnership cannot be formed for non-business purpose. However, the word business here includes every trade, occupation, and profession. For example, many accounting or audit and legal firms are organized as partnership firms. Fifth, mutual agency. Merit. Mutual agency, that is, one for all and all for one, ensures that all the partners work in common interest and in the interest of firms. Limitation. A partner's misdeeds impact all the partners and the faith of firm. For example, if a partner is an auditing firm becomes a party to a corporate scam, its impact may be disastrous for the firm. 6. Unlimited liability. Limitation. It is a common limitation for proprietary forms of business organizations. In the event of insolvency, that is, liability is greater than assets, the partner's personal assets are evoked to make up deficiency owing to mutual agency. The liability of all the partners is both joint and several. Seventh, faith as going concern. Going concern is equal to enduring life of business in the foreseeable future is uncertain. Limitations. Since partnership arises out of contract, it also sees in the same way. A partner may serve a notice of severance of the firm and the partnership comes to an end. The remaining partners may agree to carry on the businesses of the firm. However, The severance costs and the loss of momentum makes partnership a vulnerable form of business organization. 8. Succession of owner. Limitation. Ownership is not easily transferable. A new partner can be admitted only if other partners consent. 1.5.4 Limited Liability Partnership LLP. Drawing on its name, LLP form of business organization is one where liability of partners is limited. However, there is much more in this form. It has been mandatorily incorporated or registered under Limited Liability Partnership Act 2009. The Business of Corporate Affairs, the apex body of regulation of company form of business organization in India, oversees the governance of LLP too. For the purpose of compliance with regulations thus imposed, the LLP Act provides for designated partners. Upon incorporation, LLP becomes a separate legal entity and has an identity, name, and identification number, as well as life of its own, much the same way as perpetual succession of a company. The features of mandatory incorporation and separate legal entity of LLP makes it a hybrid form of business organization, that is, containing the features of both corporate form as well as proprietary form of business organization. Thus, two features do not go away with the twin limitation of traditional partnership, that is, unlimited liability and uncertainty as a going concern. Feature hashtag 4 LLP and overview. There are three columns. First is features. Second is comparison with traditional partnership. Third, whether merit or limitation and how. First, limited liability. No personal liability of partners except in case of fraud. Unlimited liability. Liability of each partner for the dues of partnership. Personal assets of each partner also liable. Merit. This does not go away with a major limitation of traditional partnership. Second, incorporation is mandatory. Partnership is registered. Partnership Act. Registration is not mandatory. Merit. The mandatory registration brings the firm under regulatory purview for of the Ministry of Corporate Affairs. This increases its credibility. Third, it is a legal entity separate from that of its members. Not legal entities separate that from its members. Merit. This does not go away with uncertainty of firm's existence as a going concern. Fourth, minimum two or no limit on maximum number of members. Partners. Minimum is equal to 2 and maximum 20 partners. Merit. The upper limit in traditional partnership restricts the scope of business and future expansion plans. Fifth, ROC is the administrating authority. The registrar of firms of respective states is the administrating authority. Merit. This is body to control that brings credibility in the eyes of stakeholders. 6. Statutory compliance. Not many. Limitations. Designated partners to ensure the compliance. However, in comparison with companies, the compliance are few and simpler. 7th, every partner of LLP is only agent of firm. Every partner of firm is an agent of firm as well as of other partners. Merit. Absence of mutual agency enhances freedom at one's hand and on the other hand frees the other partners of the burden of responsibility for the acts of a partner. 1.5.5 Company. Company form of business organization is the flag bearer of corporate businesses. Company indeed is a body corporate having an existence independent of all its members. It exists in contemplation of law, has a distinct name, address, registered office, and identification name. Some recently introduced concepts in company form of business are one person company, OPC. In fact, OPC has been most recently introduced form of business organization in India. Why the Companies Act 2013 isn't still in an emerging status, yet is being held as a likely catalyst in unleashing the entrepreneurial spirit in India. Recall that we possessed sole proprietorship as the classic hallmark of entrepreneurship. OPC is likely to be the corporate form. In addition, the Companies Act 2013 also provides from the incorporation of small company in acknowledgement of the role of small scale entrepreneurs in India. Interestingly, the act also provides from the incorporation of a dormant company that may be created for a future project or to hold an asset or intellectual property and has no significant accounting transactions. We shall, for the purpose of this chapter, however, restrict to the discussion of two forms of companies or corporate forms of businesses: private company and public company. We are already aware of ideas of independent legal existence, limited liability, and separate ownership from management. We have also seen how a corporate status inserts credibility and trust among business associations. Let us emphasize how the idea of a joint stock company lead to mobilization of large amount of capital directly from the savers, people who have saved money and want to invest, and they invest by buying shares or part of ownership of company by issuing of shares. A share is a share or portion of capital of a company in smaller denomination. In the process, capital market is developed and ownership of productive assets of a economy is democratized. Albeit, this remains an ideal to aspire, as in practice, the ownership of many public companies in India and other Asian countries is highly concentrated among few hands or promoters who own maximum number of shares of a particular company. In order to make the system of diffused ownership of joint stock companies and the management work, an elaborate system of corporate functioning and the regulation of capital market has to be in place. The Companies Act 2013 focuses on the former, and the Securities and Exchange Board of India Act 1992 focuses on latter. A company has to file a Memorandum of Association (MOA), an Article of Association (AOA), along with application for incorporation. The MOA, among other things, spells out the objectives of company and its business. The AOA focuses on its internal regulation. The company solicits capital contribution. It's called for people to invest in its shares and buy part of ownership by issuing a prospectus. The, there are elaborate provisions for Companies Act and the SEBI Act to ensure that the prospectus contains such true and correct information as may enable the public to form an informed judgment on whether or not to invest in a company. A common man can avail the services of investment advisors in this regard. Further, there is a requirement of statutory audit of the accounts of the company and publication of its quarterly results to keep the investors well informed. The SEBI also oversees the subsequent trading of company shares and the contract of listing by which the shares of a company are put for trading on stock exchange. The listing agreement, among other things, also enjoins upon the company to carry on business in an ethical, transparent, and accountable manner. Publicly traded or listed companies, the ones whose shares are traded on stock exchange, have to meet stringent category of both the Companies Act and the SEBI. This increases the cost of compliance. In contrast, private companies have lesser compliances to meet and have greater flexibility in their internal functioning. The law provides these privileges to private company because these are closely held and the owners have greater opportunity to exercise control over the management of company. There is little surprise that Indian corporate sector is numerically dominated by private companies. In fact, the overall world there has been a distinct trend towards privatization of such public limited companies in a view of growing cost of compliance. Features hashtag 5 private company versus public company. There are three columns. First is feature of private company. Second is feature of public company. Third, comparative assessment. First, minimum number of members 2. 7. Lower number of minimum members to ease of formation. Second, maximum number of members 100. No limit. No upper limit on the members of public company puts on its disposable endorsement funds. Third, there is restriction on transfer of shares. The shares may be transferred freely, tradable on stock exchange via listing. Listing of shares of a public company adds to the liquidity so that the investors may encash the shares whenever they need it. Fourth, minimum number of directors 2, 3. Not of much consequence. Smaller board size adds to internal efficiency. 5. Private companies are exempted from constituting such committees of board of directors as audit committee, CSR company, stakeholders committee, and the nomination and remuneration committee. Sorry. These committees are to be mandatorily constituted. More liberally, a governance regime of private companies exists because common man's money is not at stake in the share capital. Sixth, it can start business upon incorporation. A public company is required to obtain certificate of commencement of businesses in addition to certificate of incorporation. Fewer formalities add to attractiveness of private limited companies. More so corporatization of proprietary concerns. Example, partnership forms. Abbott. Now there is also an option for partnership firms to convert to LLP. Before we close this chapter, let us remind ourselves that foregoing discussion in the forms of business organization deals, just deals with broad distinct features. The finer details has been left for subsequent papers that you will be studying to attaining your CA qualification. Summary. Business and business commercial knowledge is vast, eclectic, an ever-evolving and expanding universe of knowledge. Professionals like chartered accountants whose primary aim of work compromises businesses must enhance the awareness of and enlightenment with the philosophers, lexicon, and grammar of BCK. It is foundational to grasp the core. Thus, it is unlikely that one can truly master accounting and taxation that, in popular perception, compromise the core of chartered accountancy without adequate base in BCK. In this chapter, we studied business in a wider context of human engagement, more in the context of a myriad of many economic activities. We have seen that business as an economic activity is distinguishable from employment and profession. It focuses on production, not for self consumption but for markets. It is characterized by investment intensity and employment generation potential. It spurs economic growth via entrepreneurial initiative and creativity. We have also described the meaning of business ownership and the various forms it may take, single or sole and joint, proprietary and corporate. We have seen how unincorporated enterprise, more so sole proprietorship, compromise the informal sector. Individually, not as powerful but collectively, an economic force to reckon it. The ownership of an enterprise is fraught with the failouts of unlimited liability and the status as going concern with vigilant. We also saw how Hindu undivided family businesses compromises a distinct Indian form of business organization. Finally, we focused on growing corporatization of economic system. We studied as to how this form necessitated the development of comprehensive system of incorporation, accounting, audit, and accountability of the corporations toward various stakeholders. Annexure 1. Observation card illustration 1. Items, first column, second column, sofa, table, chair. First, group of item or industry, furniture. Second, whether procured directly from producer, yes. The most likely source of procurement, furniture showroom. Chain upon the original producer, furniture workshop. Remarks if any. It is common that workshop and showroom compromise an integrated setup even as these might be located at a different distinct places. However, there has been marked change in customer preferences from branded furniture and such sources as Pepperfry, Uber Ladder, etc. Observation card illustration true. Two columns. First items, second books. Group of item or industry, publication industry. Whether procured directly from producer, no. The most likely source of procurement, retail bookstore. Chain upon the original producer, retailer dash wholesaler or distributor dash publisher. Remarks if any. Books are increasingly being purchased online. Moreover, e-books are also downloadable for publishing websites. Test your knowledge. Multiple choice question. First, consider the following table showing columns for the nature of economic occupation and the corresponding characteristics of income, and then choose the right solution option from the alternatives given below the table. Economic occupation. First, employment. Second, profession. Third, business. Fourth, land or property rental. Fifth, lending. Income characteristics: A. Profit. B. Wages and salaries. C. Interest. D. Rent. E. Fees. Option A 1A, 2B, 3C, 4th D, 5th E. Option B, first B, second C, third D, fourth E, fifth A. Option C, first B, second E, third A, fourth D, fifth C. Option D, first C, second D, third E, fourth A, fifth B. Question 2. Which of the following statements distinguishes business from entrepreneurship? Option A. Entrepreneurs are the business owners too. B. All business owners are entrepreneurs too. C. Entrepreneurs seek out new opportunities and pursue innovative business ideas. D. A and B. Third, which of the following statements does not compromise business activity? A. Sale of old furniture by household for profit. B. A carpenter made furniture for its domestic use. C. Steel furniture industry. D. Domestic applicants industry. Fourth, which of the following is not an economic objective of the firm? A. Sales profit. B. Improvement in market share. C. Profits and return on investment. D. Conservation of natural resources. Fifth, trading implies buying for purpose of selling. Applying this criteria, tell which of the following activities would not qualify as trading. A. Purchase of goods in bulk quantity from the manufacturer and sell smaller quantities to the retailer. B. Buying from wholesaler and selling it to customers. C. Buying from retailer for self-consumption. D. Purchase of raw material from suppliers for the further processing in the factory. Sixth, which of the following occupation require rendering of services based upon specialized knowledge and membership of an accreditation and assessment body? A. Employment. B. Profession. C. Business. D. Agriculture. Seventh, the occupation in which people work for others and get remunerated in return is known as A. Business. B. Employment. C. Profession. D. None of the above. Eighth, which of the following statement describes the best joint Hindu or Hindu undivided family business? A. It is a form of business particular to and recognized as such in India. B. Every family business is in fact HUF business. C. In HUF business, there is a family involvement in business. D. Either A or C. Ninth, substantial development of business implies A. Consistent economic performance. B. Attention to social problems. C. Harmony with nature. D. All of the above. 10th, which of the following statement characterize the best non-economic activities? A. Non-economic activities do not require any investment of resources. These activities do not entail any operational cost. C. These activities are undertaken by assistants. D. The underlying purpose of these activities is not earning a livelihood but social, psychological, or spiritual satisfaction. 11th, the Indian Companies Act provides for registration of A. Private Limited, B. Public Company, C. One person company, D. All of the above. 12th, find out the incorrect statement. A. Sole proprietor is a business unit having unlimited liability. B. Limited liability partnership firm may be constituted. C. HUF business may be formed by a group of people who do not belong to family. D. Hindu includes Buddhism, Jain, Sikh families. 13th. Which of the following is incorrect? A. Economic activities are driven by profitability. B. Economic activities are guided by self interest. C. Non economic activities are driven by emotions and sentimental force. D. Non economic activities are not at all important in life. 14. Which of the following is not considered an economic activity? A. Saving and investment. B. Production and consumption. C. Service of chartered accountant. D. Providing free medical aid by doctor. 15. Maximum number of members in private limited company is A. 50. B. 200. C. 20. D. 500. 16. Which of the following is incorrect? A. Private company has minimum 2 and maximum 200 members. B. Public company has minimum 7 and maximum no limit. C. Private company has shares are freely transferable on stock exchange. D. Companies Act provides that there may be constitution of one person company. 17. Which of the following is incorrect in reference of partnership? A. Contractual ownership of business. B. Liability of partners is limited to the extent of one's share capital. C. The contract is an agreement enforceable at law is called deed. D. Deed may be registered in India. Lender the Partnership Act 1932. Find the odd one out from the following of 18 to 20 question. 18. Partnership may be formed to carry on A. Any business. B. Occupation. C. Profession. D. Social enterprise. 19. There can be partnership between A. Natural person. B. Artificial person. C. Partnership firms. D. Any combination of natural and artificial persons. 20. HUF can comprise members of A. Hindu and Sikh family. B. Jain family. C. Buddhism family. D. Muslim family. 21. The attribute of profession does not include A. Rendering of specialized nature of services. B. Certificate of service from government. C. Self-imposed code of conduct. D. All of the above. 22. In which form of business do the owners have obligations to pay off liabilities from personal wealth and as well as if the business money and assets are not enough? A. Private company. B. Public company. C. HUF. D. LLP. 23. What is the what are the two animal references in stock market jargon? A. Cow and sheep. B. Lion and deer. C. Bulls and bears. D. Horses and donkeys. 24. We can classify all summary businesses relating to a particular activity as A. Business. B. Companies. C. Organizations. D. Industry. 25. Which apex body of regulation oversees the governance of LLP? A. RBI. B. Ministry of Commerce and Industry. C. Ministry of Corporate Affairs. D. Ministry of Micro, Small and Medium Enterprise. 26. In recent news articles from around the world, there has been increasing trend of privatization of companies. Why is there such a trend? A. To save taxes. B. To save the cost of compliance requirement. C. To make personal wealth. D. To be more sustainable and socially aware. 27. Which of the following is not true about limited liability partnership? A. Separate legal entity. B. Incorporation not mandatory like normal partnership. C. Designated partners. D. Hybrid form of business organization. 28. Which of the following statements cannot be associated with business? A. Revenue and profits are core to every business. B. Only an educated person can start a business. C. Capital is needed to start a business. D. It is better to be aware of legal compliances of all business. 29. Dormant company can be incorporated for which of the following purpose? A. For future profits. B. Holding intellectual property. C. Both A and B. D. Only for creating a dummy company to book insignificant transactions. 30. Head of Hindu undivided family is called as A. Father. B. Karta. C. Co-partner. D. Mitakashara. 31. This is an in-basket enterprise. Put the serial numbers of activities given below into the basket labeled as economic and non-economic activity. A. Cooking of food by homemaker. B. Dhaba wale picks up the food from home and delivers it to office. C. Playing of piano as a hobby. D. Pianist in a band. E. Music composer. F. Elder sibling assisting the younger one in studies. G. Giving private tuitions. H. Shopping. I. Cycle repairing shop. J. Ice cream vendors. K. Exercising in park. I. Fitness training. M. Volunteering in a old age home. N. Employment in charitable organization. O. Laundry shop. Answer keys. First A. 2C. 3A. 4D. 5C. 6B. 7D. 8D. 9D. 10D. 11D. 12C. 13D. 14D. 15B. 16C. 17B. 18D. 19C. 20D. 21B. 22C. 23B. 24D. 25C. 26B. 27B. 28B. 29C. 30B. 31. Economic activities are B, D, E, G, H, I, J, L, N, O. Non-economic activities are A, C, F, K, M.